Welcome back, traders. Thanks for tuning in again. We're here with a new weekly outlook. Today we're going to take a look at the indices, specifically the S&P 500. I would appreciate if you like the video and subscribe to my channel. I have good news for you. We will be continuing the live stream sessions on YouTube going into the next week. So if you don't want to miss out, subscribe and join my Telegram channel, because there I will post the specific times when we will be streaming. I'm ready, I hope you're ready, and now let's get into the weekly analysis. You're currently looking at the monthly time frame from the S&P 500 E-mini futures, and as you can see, the monthly candle retraced lower after taking out these relative equal highs. But we're still rejecting the monthly order block coupled with the fair value gap, and as you can see, we are still looking for a run above this buy side liquidity. So my long-term bias is still bullish. We want to see a run above the buy side liquidity, and I think that's it with the monthly time frame. Now let's get into the details and look at the weekly time frame. On the weekly time frames, you can see the two levels which I outlined for you in the last weekly outlook, and I said to you that you should outline them and have them on your charts. The first one was the volume imbalance. As you can see, we closed right at nearly at the 50% of the volume imbalance and the open of the balanced price range. The high of the balanced price range. And you can see last week we traded into the balanced price range and rejected it higher on Friday. I don't favor any deeper retracements, but of course price can retrace into the weekly order block one more time and then trade higher from there. But the best case scenario for me is when price would start to rally straight away, and once we close above this bearish candle, it becomes a bullish order block. And of course we're targeting this buy side liquidity mentioned on the monthly time frame. Right now we're in the daily chart, and as you can see, I took some levels off from the weekly chart so it doesn't look so messy on the chart, full with lines and boxes. As you can see, this orange box is the new week's opening volume imbalance, and as you can see, price traded around this area. Monday traded into it, rejected lower, trading to the 50% of this fair value gap right here, which is outlined with these dotted lines. As you can see, on Monday we traded into the 50%, and then I thought Tuesday would be the low of the week, and then we would run for the buy side liquidity. But market failed to trade higher on Wednesday, reversed, and Thursday did the rest, took out the low. And on Friday we traded into the daily bullish order block and showed a pretty bullish close with this big wick, and I anticipate a continuation higher going into the next week without any deeper retracements, because as you can see, everything seems pretty balanced. Of course, price could run for the rejection blocks right here and trade one more time into the weekly order block, which consists of these three down close candles. But I think the market prepared nice buy side liquidity, all these relative equal highs for the next week. Now let's look at the economic calendar and why I think that this buy side liquidity will be taken out next week. Looking at the economic calendar, as you can see right away, we have some days which are fully stacked with red folders. On Monday is quiet, and also Friday, no high impact news or medium impact news releases coming out on these days. Tuesday, we have the CPI news release. I would definitely stay out of this news event and trade the second phase. The CPI core news release and all the major impact news releases come into phases. The first phase is the manipulation, and then after that comes the real move. Oftentimes it is in the opposite direction of the manipulation. As you can see, all the high impact news releases and medium impact news releases included too come out at 8:30. So every day I will be in front of the charts at 9:30 a.m. not later and not earlier. On Wednesday, we have core retail sales and 2 other high impact news releases. Also, wait for the manipulation to come and trade the real move at 9:30. Thursday, same thing, core PPI news release. There we could get the run above the buy side liquidity, but of course, you need to use it in context and where we're at in the marketplace right now. On Friday, February the 17th, we have also no major impact news releases, so price could go quiet there and just consolidate going into the close of the week. For the next week, I chose the consolidation midweek rally weekly range profile because this makes the most sense coupled with our analysis. It just perfectly lines up. So of course the profile is bullish, our bias is bullish, nothing has invalidated our higher time frame bias. So how to anticipate this profile when the market is bullish? And this is what we anticipate, of course, and has yet to run to the premium array on the higher time frames, which are the relative equal highs which market failed to trade to last week, and it has recently rallied from a discount array, which is the daily bullish order block, and simply paused without any bearish reversal price action, indicating price is about to expand higher for the premium array. And now let's go back to the daily time frame, but remember this profile. So Monday rallies straight away, Tuesday and Wednesday form a retracement, and then we expand higher going into Friday. Now let's look one more time at the chart, scroll back through the presentation, and as you can see, we have our premium array is this buy side liquidity, the buy stops, and market has recently rallied from a discount array, which is the daily bullish order block, and which means that price is about to expand for the buy side liquidity. That's what we anticipate for the next week. I think this perfectly lines up with our analysis and what we want to see. But if you want to stay up to date and don't miss out on the live sessions, which we will be hosting next week, then join my Telegram channel. If you like the presentation and the weekly outlook, give me a thumbs up. And I would say this is it. Thank you for tuning in. Stay safe, trade safe. Bye.